Today, we'll be taking a look at the industrial REIT stocks. In the past, we looked at retail, healthcare, and residential REITs. I will link them in the description box below if you want to take a look at those videos. Like the name suggests, industrial REITs own industrial facilities such as warehouses and distribution centers, which plays an important role in e-commerce. First, as a disclaimer, I just want to say I'm not a financial advisor, so please do your own due diligence before investing. We'll be taking a look at 5 industrial REITs today. Of course, if there's one that I missed that you would like me to take a look at, please let me know in the comment section below. I'll make sure to include it in a future update. First, let's take a look at some basic information. The first thing that jumped to me is the debt of Nexus, which is higher than the rest compared to the size of the REIT, of course. Summit Industrial seems to have the highest valuation compared to the rest as well. When looking at the yield and payout ratio, there's two that I want to point out, and that is Summit Industrial with their 97% payout ratio, which is higher than I would like, and their payout ratio is usually higher compared to the rest. Even in the past, their payout ratio is usually around the 90% range. The next one is Nexus with their 8% yield, which is excellent, and their 80% payout ratio, which is very consistent with their historical payout ratio as well. But they do have a sizable amount of debt, and it is the smallest compared to the rest, but it also has the lowest valuation. When we take a look at the revenue growth, we notice that Summit, WPT, and Nexus has been growing the revenues nicely the past several years, but they have also been issuing a lot of shares to fund the growth, which is a similar case with Dream as well. During the time when the revenue was flat, the number of shares outstanding didn't really increase drastically, but when the revenue grew in 2018, it came at the cost of issuing more shares. Only Granite grew while maintaining the number of shares outstanding pretty consistent. They did issue shares when they needed to, but they also bought back shares when they could as well, which has kept the number of shares outstanding pretty flat over the years, which I love. And on top of that, they do show some revenue growth as well. We currently are at a time where the revenue growth is pretty flat, but we are currently seeing some revenue growth for 2019. When we take a look at their funds from operation, the trend is pretty similar to the revenue, but we do notice a massive drop in 2009 from Granite. In order to know the reason of the drop, we have to take a look at the history of the REIT. In 1999, Magma International, which is a Canadian auto parts manufacturer, underwent a corporate reorganization, where their non-automotive business was spun off into a new company called Magma Entertainment Corporation. Granite, which was originally called MI Development, was also part of Magma International until it was spun off in 2003 into a separate company. And Magma Entertainment Corporation was mostly owned by MI Developments, and in 2009, Magma Entertainment Corporation went bankrupt. Frank Strana, which was the founder of Magma, indirectly controlled MI Developments, and he had MI Developments provide financing to Magma Entertainment Corporation against many of its shareholders. In 2011, Frank Strana finally gave up control of MI Developments. In return, MI Development transferred Magma Entertainment Corporation's gaming assets to the Strana Group, and in 2012, MI Development changed its name to Granite Real Estate. Earlier I said their funds from operation were trending up, but at a cost. Every company besides Granite has been issuing more and more shares. So if we take a look at their funds from operations per share, we'll notice that they've all been flat besides Granite, which is the only one that has been keeping their numbers of shares outstanding pretty consistent over the years. This is one metric you have to keep an eye on, because in order to grow their dividends, they must grow their profits per share. When we take a look at their dividends per share, we notice that Summit has had some very high dividend payouts in the past, which are all special one-time dividend payments. If we were to factor those out, we can see a much clearer picture, and overall you notice one thing that they all have in common, and that is they all barely have any dividend growth, except for Granite, which is exactly what I would have expected, because everyone besides Granite hasn't been able to grow their profits per share. When we actually take a look at their dividend growth, it shows exactly what we were expecting. You may notice a small dividend growth in Summit Industrials, but I don't see that growth continue in its current state, as they already pushed the dividend payment pretty much as high as they could with their current 97% payout ratio. Their profit margins based on their funds from operation has been very consistent, no big deviations from the norm, but we do notice that Granite does have high margins compared to the rest. When we take a look at their stock performance, we notice that Summit in the red has outperformed the rest. In the last 3 years, Summit has really been on a tear. Don't get me wrong, Dream and Granite in green and blue has also performed very well as well. And Nexus in teal has performed the worst. It's pretty much been flat the last 6 years. When we take a look at their annualized return, we can see a clearer picture. Summit all the way at the top by far, followed by Dream and Granite. WPT didn't have the best performance, but it's been okay and steady. Nexus has been pretty flat, as we see, it's just been hovering just above the 0% line. So in my personal opinion, which one do I like? Again, I just want to state that this is just my personal opinion, but there is only one that stands out in the group in my eyes that I would even consider purchasing as of now. But even without me stating it, I'm sure some of you already know which one that is. But before I state it, I just want to show you a couple of charts again to emphasize why I'm choosing this REIT over the others. The first chart and the main chart that got me was the funds from operation per share, because only Granite has an upwards trend. If we were to ignore the part about the bankruptcy back in 2009, because since then they are the only company that's been able to grow their funds from operation per share, where everyone else has been flat. Why is this important? Because if they can't increase their profits per share, there is no way they can grow their dividends, and we can see that clearly in the dividend growth. Only Granite has been able to consistently grow their dividends, so in the end, there's only one company in my mind in their current state that can further grow their dividends, and that is Granite. But there is one more thing about Granite that I don't like. Magma International is their main tenant, which is responsible for over half their revenue, which is not surprising since it was spun off from Magma International. But at its current valuation, I do find it a little too rich for my liking, but I will be keeping it on my radar and seeing when and if we get a pullback. And as always, if you enjoyed the video, please like and share the video. I really appreciate it because making these videos does take a lot of time to do the research on these companies, and it really helps out the channel. And if you haven't subscribed yet, please make sure to smash the subscribe button, and thank you for watching. I'll see you in the next video.